AMT, alternate minimum tax. Come here. MAT, minimum alternate tax. AMT, alternate minimum tax. See, this so happy, na? Mainly for companies, I have told you a little bit background of MAT, minimum alternate tax. What background do you remember? If there is a book profit, remember book profit? Not a firm. Book means profit as per books. Okay? But tax is very low because of deductions. All the deductions or any benefit which you are claiming under income tax. Tax liability is very low. Pay attention. This is known as normal provisions. Tax as per whatever we did till now. They are known as tax as per normal provisions. And then they say that, they means income tax says that if there is a book profit, you have to still pay tax, not so less tax. There has to be some benchmark, some threshold limit that has to be paid. Are you following here? This is when we say tax is low, it can be nil also as good as. So they have set a benchmark that is known as minimum alternate tax. Are you following here? Now pay attention. When you compare, you always have to practically compare both these tax liability amounts. Normal provisions tax liability and MAT liability provisions. You tell me, you will pay taxes as per which one? Whichever is lower or whichever is higher. Common sense, whichever is higher. Because your tax liability practically should not go less than the MAT amount. That is why you have that MAT as benchmark. Are you following or no? Yes. So A, pay attention now. The book profit is rupees 100 or taxable profit is book profit is 100. And as per normal provisions, the tax comes to only rupees 10. And as per MAT, okay, it comes to 18.5. Which one you will pay? 18.5. Very good. If as per normal provisions, the tax comes to 20 and MAT is still 18.5, then will pay 20. Are you following here? So this is like a backup provision. Backup, you understand? This is like a backup. That means if you did not pay as per normal provisions, pay as per MAT provision. Are you following here? This is mainly for companies. Are you clear with MAT? AMT is for other than companies. Who was the company behind this picture? Reliance Industries, remember? Pranab Mukherjee, I told you, the only listed company which did not pay taxes, especially for them I think in 1985-1986, when Pranab Mukherjee was finance minister, he had brought the concept of MAT. So here, for our syllabus, very important, expect a question now on AMT. Just to show a little bit difference, they have just altered the word, that's it. Alternate minimum tax. Concept is exactly same. Understood, Satya? Yes? That is given under section 115 JC. 111, 11A, 12, remember or no? What are these? 115 tax rates. They are all tax rates, special tax rates. Pay attention. Where the regular means over there right now, normal. Means whatever we used to do till now. Yes? Where the regular or normal income tax payable by an individual. Is it company? So AMT is only for individual. For a PY, computed as per provisions of Income Tax Act. That means regularly. So regular tax is less than AMT payable, alternate minimum tax. Regular income tax is low than alternate minimum tax. Tax will be paid at AMT. Clear or not? Then the adjusted total income shall be deemed to be the total income. So again here we will calculate some concept known as ATI, adjusted total income. And on that adjusted total income we will calculate tax at the rate of 18.5%. Check. Such person shall be liable to pay income tax on ATI at the rate of 18.5%. This is your basic tax rate. Surcharge, cess, always extra. Understood or not? Basic tax rate is something like slab rates. Remember slab rates? LDCG 15%, 20%. That is quite high. But because still income tax, it is coming quite low. But because of AMT is high, possible. Yes? ATI means total income. Total income means, over here you can write down NTI as per normal provisions. Normal, you understand now? Means regular provisions. Has increased by, and highlighted, increased by. That means again you have to increase. Are you following or no? Tell me, from NP you remember? Net profit as per books of accounts. From that journey up to NTI, there are many deductions, something or the other happening. Even in PGBP, we used to allow some items and disallow some items. So there is a journey between NP and NTI. Are you following or no?
Yes.
Everyone okay to here? Now, for your AMT calculation, we start figure with NTI. Just now you have written that, okay? ATI means total income. Total income is taxable income. NTI as per regular provisions. Over there you have to add back. You have to add. What? Deductions claimed, if any, under section 10AA. What is 10AA? SSL unit export. Profits from SSL unit less 10AA you have done or not. Deduction is claimed. So add back the deduction. Add back the deduction of whichever is 10AA is claimed. Next one. Deduction claim under section 3580. What was 3580? Specified business. Capital expenditure allowed or not? Capital expenditure allowed. Following, if it is claimed. So 3580 as reduced by depreciation allowable under section 32. Add back what? 3580. Reduce what? Allowable depreciation. Why allowable depreciation? इसमें कुछ गड़बड़ है. 3580 includes capital expenditure. Assume you have taken plant and machinery. 3580 takes 100%. So we don't allow depreciation. So we are adding back 3580, allow depreciation. We will do questions, don't worry about it. Okay? As reduced by depreciation allowable under section 32, as if no 3580 was given. So, or no 3580 was claimed for that asset. Are you following a little bit? And deduction, very important. Under any sections included in chapter 6A, deductions which you have claimed, but in respect of income only. Chapter 6A, deduction in respect of income. There are only hardly few sections. Very good. AT, IAC, IB, many, I, all of that. Correct? Northeast states, Himachal Pradesh. Remember, ATP is there. I have given you actually one sentence itself. Deductions on income. ATP is also there for cooperative society. Then yes, we have that kitab, QQB or something. Then royalties there are something. And ATJJAA. New employees, no? Then biodegradable is there, something is there. ATJJA is for biodegradable waste business, no? That profit. Okay? Underline this one. That means those chapter 6 deductions which you have claimed for income only. Rest of it you have seen they are mainly for expenditures. Exclusions also important. That means AMT is not applicable to individual HUF, AOP, BOI, whether incorporated or not, or AGP, if ATI does not exceed, very important now, 20 lakh rupees. So if ATI is less than 20 lakhs, AMT not applicable. AMT credit. Always keep in mind, credit means something you have done already, something extra, something beneficial. You were, in this example if I give you again, you were supposed to pay tax on 100 rupees whatever, and as per normal provisions it comes to 10. Ideally, you should have paid tax 10 rupees, ideally. But now they have put some more condition, now you are paying tax at 18.5. Pay attention. The difference between this will be treated as MAT or AMT credit. 8.5 rupees in this example. Any tax paid under AMT over and above regular income tax provisions will be known as AMT credit or MAT credit in case of company. Understood? Credit, pay attention now. It is excess of what AMT paid. over regular income tax payable for the year. Underline this, for that year. So in which years AMT credit will always generate? Whenever regular tax is less than AMT tax or AMT. Carry forward and set out. Important. Tax credit. Which tax credit? AMT credit. In our example, how much it is right now? 8.5. 8.5. Very good. Can be carried forward and set off. Pay attention. Against income tax payable in the later year to the extent of excess of regular income tax payable under the provisions of the Act over the AMT payable in that year, in the next year. Bounce. Now pay attention. This AMT credit is there. Let us assume this is for PY 1920. This will carry forward now. Everyone okay here? PY 2021. Okay. Again, you will compare both the tax amounts. Which one? Regular and AMT. Now pay attention. Regular, let us take it as 45. Okay. Again, I am giving some figures now. And AMT, for sake of simplification, I am taking here 57. Huh? 57. Focus. AMT is 20. Pay attention. For 2021, this tax amount I am giving you. What tax you will pay? What is liability to pay right now? 45. AMT will not pay. But did you pay extra in the earlier year? You can take credit while paying regular income tax. It is like saying that now, since you are paying under regular tax, take the benefit of the earlier taxes already paid. It is like, see, profit you always tax in the year, correct? And losses can be carried forward. Is it only per year basis? Profit is for the year, you tax that year, okay. But loss, benefit is given in the next year. It is not like, okay, this is loss, don't pay taxes, that is okay. No, that loss is also carried forward. You are getting benefit of the loss. So it is something similar here. When you have good amount of tax to be paid, okay, as per regular provisions, you can take benefit of the tax you have paid when you didn't have much income. Are you following here? You can take benefit of AMT credit in the next of the years. Balance will be again carried forward, okay, to the next year and set off in that year in the similar manner. That means if it is whenever it is eligible, you can set it off. And how much carry forward maximum? 15 years. A for 15 AY succeeding the AY in which the credit becomes allowable, or in the year in which you have earned the credit. From there now next 15 years you can carry it forward. After that it lapses.